Good evening. This is Ken Long from Tortoise Capital, and we're going to take a look at a few of the trades from today's very quiet session. The first one we're looking at is a swing trade on XIV. This is a continuation of a trade we started last week. And you can see on the daily charts here we have the dragon flattened out. We have a swing low and then a slightly higher swing low in the dragon. That's a good thing. We have the Z3 bands are pinching. We have the RLCO occurring here. The 30 has rolled up. The 10 has rolled up. Both 30 and the 10 have crossed through the dragon here. That's the day we can get long at 27 with a stop down here at about 24.5. So about $2.50 on the initial stop just below the southern skin of the dragon. Could also use that PSAR, the accelerated PSAR. Letting this thing just roll. We set a target up here at the RL270, which is just slightly below the gap here. So we're aiming for about 37.5. 27.5 to 37.5 is $10 on a $2.50 risk. So that's about a 4-to-1 reward to risk ratio on that swing. So I feel pretty good about that. On today's low volume gains, we would take the opportunity to move from our initial risk to about 28, just below the 2-day low, about the north end of the dragon. That gives us a no lose plus dinner for 2 initial stop, and now we're just going to see what we see. I think this price here about 31.5, if we can clear that, then it looks very favorable to get back to the RL270 at some point. Now, if that's what the swing trade looks like, we have had a long side bias because we've got a long orientation from the swing, so we look to add turbo. Today was a beautiful day to turbo. There's a 65-cent frog box today. That's what the shaded yellow area is, and so from the low of the day to the high of the day, if we just take that as a mechanical frog entry, we either get in around 11 or maybe 10.45 if that had tripped at position 2. And then even with this pullback, that trailing 65-cent stop never hits, and the frog would get us out at 31, so we'd have an entry around 29.5, exit at 31 on 65 cents. That's a little over, I want to say, 2.5 R. If we were playing this tighter using the dragon, we'd probably be capturing a gain here at 3. Not enough to go from 3 down to the Bollinger Band mean. So 3 would have been an exit on this entry at 2. A Z minus 2 and a support at the RL270 and the VWAP. We get a re-entry right around here at about 30.30 in this region 4 as the RL10 crosses back through the dragon, which would have made a higher low and a sloping upward. In 5, we might have taken this as a exit, would have gotten out around 30.60 from an entry at 30.30, so maybe an R in here. There's a potential re-entry here at 5 when the RL10 holds and crosses. And then at 30 minutes before the close of the day, you end up taking this exit here when the RL10 comes back through. So that works either as a frog or as a more carefully managed, tighter stops, larger position size RLCO trade or an RLXD trade. A similar one from the chat room today. Charles nails USO very nicely here. He has a Z3 pinch box that is 45% of the frog box. He plays the breakout short here at about 1570, gets on a return back to the edge of the river here. He covers just after lunch about 1530, so picks up 40 cents or so on a about a 15% or 15 cent initial risk. So there's a couple are in here whether or not you play an exit down here at the return to the Bollinger Band mean, or if you take a re-entry to the edge of the river, you're getting somewhere around 2R and a little bit of change. So some good work today from Charles in the chat room. Some great discussions on the psychology of trading in the room this morning as well. Guys are doing some great work with standardizing their daily trading plans. Looking forward to some more great work this week. So that's Ken Long from Tortoise Capital with a look at some opportunities in both the swing and the day trade. Keep your risk measured and your powder dry.